With Bryan Doherty from Stewart-Peterson Incorporated. And Bryan's here at World Dairy Expo. And how's life treating you, Bryan?
Well, it's treating us pretty good. A little rain delay today, so a lot of farmers at the show.
Yeah, we noticed that, the first part of the week, it was just beautiful. Blue skies, warm weather, little light on the attendance because you had some folks probably out in the field, huh?
Oh, we sure did, and we noticed that too. And we talked to our producers here over the last week, asked them if they were coming. They said yes, but, and they didn't know what day or how much field work they'd have to do. So we saw that activity pick up the last few days with the rain, and it's a good rest for them before they kick it hard next week. It looks like this rain system probably moves through by Monday or Tuesday.
Well, let's talk a little bit about what's in the field and some of these feed prices right now. Looking a little better than when we were talking last year about this time.
Much better. Last year we were right in the throes of a drought, uncertainty. Farmers didn't know what they had in hand. Prices were high. This year it's kind of a different story, almost 100% different in this regard. Corn prices were hovering around $8 a year ago at this time on the board price in December corn. And now we're around $4.50. So you've got a pretty big reduction there. A high level of confidence that this year's crop will be much larger than last year's. Last year, the USDA national average was 123 bushels an acre. This year could be 156, 158. Private estimates yesterday came out 158, but it's probably not under 150. And that means more supply, bigger carryout, a more comfortable feeling for anybody in the livestock industry that the product's going to be there for the next year.
What about beans, though? It's a little bit different story, isn't it?
It is. It's a much different story. It's a two-crop season between the southern hemisphere and northern hemisphere. But more importantly, you've got such a very aggressive usage market for soybean oil, especially out of the Far East, China. And the export pace has been really, really strong for new crop beans this year to date so far. So it all boils down to, in the next 30 days, is yield going to tip the scales better than expected, or is it going to come in disappointing? And so far, we'd like to say it's tipped to the better than expected. So bean prices have dropped back well over $1 off their recent highs.
So those results at the end of, in about a month, you're pretty optimistic, it sounds like, for now. Depending on, there's a lot of factors that make up, prices. And let's shift to, when we were talking about feed prices going down, usually the milk price goes down. Can you elaborate on that a little bit?
There is a correlation, sure. When feed prices cheapen, the dairy producer's he's in a business, and that business says when your inputs get cheaper and you've got a chance to increase your margins, and you see that, you're going to probably do one thing. It's human nature. You're going to want to produce more and make more money, and so you're going to do it. Your neighbor's going to do it. The incentive is there, and like any business that works on a margin, when there's positive margins, you try and maximize that. So dairy producers, the dairy industry has been very in tune to that, and they've margined or worked with those margins, when they're there profitably to increase production, and consequently it's a cycle, and you're going to get an increased production cycle when there's increased feed availability at a cheaper price.
A lot of the dairy producers that come by here, you can tell they're hardworking. They work every day. Somebody that's not working right now is the government. They're shut down. And what are you hearing about this? And is there any hope in Washington, D.C. these days?
Well, there's always hope. And I'm if history's any indicator, something will come about. Both sides are posturing right now for their beliefs. But eventually the business of running the country will come back in full circle, and it'll probably get behind us. So right now, sure, there's a lack of information, and so we're hearing some concern about that. But from a producer's perspective, you can't really concern yourself about that. You can't control it. You've just got to deal with it. And so we've been pretty strong on encouraging farmers to recognize, hey, it could be a government shutdown this week. It could be, flooding next week. There's always something that it could be. And so it's called being prepared. We really, really focus on preparing for what could happen, what might not happen, the what ifs. And that way, when they do, you're well prepared. The second thing is the government does produce a lot of useful information, probably more so useful to someone like me who can track daily slaughter numbers or cheese prices. How does that really affect a producer? It may or it may not. He may use that information. What a producer really ought to be thinking about, though, is let's look ahead 3 months, 6 months, 9 months and say, okay, we've got a crop. Let's assume the USDA is going to get back on track with the reporting numbers. What's the big thing that can affect producers in the year ahead? And that is managing the input side of feed costs and then managing the output, the milk production price, as best you can through strategy.
Well, speaking of, well, not necessarily the government, but the Federal Reserve, there's rumor of tapering back their quantitative easing or whatever we want to call it, but that's going to have a direct effect as well because, the markets react to that kind of thing one way or the other, right?
Well, markets do. Now, it depends what market you want to talk about. If you've noticed, the stock market has a pretty quick reaction to anything that is set out of Washington or elsewhere regarding either the Fed Reserve, interest rates, and the market moves on that. Step back from the bigger picture. These things cycle in and they cycle out. So, yes, it will have an impact. I think for producers, the one thing they want to keep in mind is that from a historical perspective, interest rates are low. And when you're pushing $85 billion a month into the economy, at some point, there's a likelihood interest rates rise. It could affect things like the U.S. dollar. It can affect a lot of things in the big picture. So if I'm a producer, now I'm really wanting to look at this as a big measure and say, okay, how can I and what can I do to, let's say, lock interest rates or shift that risk? Because it is a risk at some point. Just because they're low now, history's told us that's not going to be the case in the long run. So I would certainly start looking at ways to do that, whether it's through some sort of hedging method or locking in long-term capital, those kind of needs. And I think dairy producers probably have done that and they're in tune to it. But it's just one of those things we need to be aware of as we move ahead. Things are going to happen in the government, and they will have some impact, whether it's the new farm bill, whether it's interest rate changes, whether it's the Federal Reserve tapering off, the bond selling and bond buying by the government. So there's going to be a lot of things in the next 6 months that will come into play. Again, for a dairy producer, because we're at the dairy show, I would certainly argue, look ahead and ask yourself in the next 6 months, how much cheaper I think corn realistically is going to get and soy meal. How do I protect these low prices? And then also when I look at milk, what can I do to not only, maybe lock in price or shift risk, but how can I enhance that price? Are there any strategies out there? So now is an excellent time, especially if you get the rain delays, start asking these what I'm going to call critical questions to the right people that can help you achieve your goals.
All right. Well, that's good advice. Thanks, Bryan. Appreciate you stopping by. Bryan Doherty from Stewart-Peterson, Inc. Thanks.
My pleasure. Thank you.